Welcome back to the Humble Market Timer YouTube channel. Once again, if you enjoy the content, please like, comment, and subscribe. Today's video will be the second of a series of videos that I said I was going to do on companies that are still private but have stated that they will be IPOing and going public in the near future. In the previous video, I chose the company Anduril, and in this particular video, the company that we'll look at will be SpaceX. We'll see if it would be prudent to try to get exposure in SpaceX now through other companies that are publicly traded, or should you just wait until it IPOs when valuations tend to get pretty inflated. Before we go any further, here's my disclaimer. Once again, these are just my ideas, not investment advice. Now, SpaceX, which is the brainchild of one Elon Musk, designs, manufactures, and launches rockets, satellites, and spacecrafts. Its ultimate goal, though, is to make humanity travel extend beyond Earth. Their products include reusable orbital launch offerings and broadband service through their satellite constellation via the company Starlink. A couple of little known facts about SpaceX and Starlink is Starlink has over 7,500 satellites surrounding Earth. That makes up about 60 to 70% of all satellites surrounding the globe. That is an awful lot of infrastructure. And I don't think there's any other company or any other group that has anywhere close to that type of infrastructure in space. Now, just in the past year, SpaceX has gotten a valuation of $350 billion. So it has, through the last round of funding and the number of shares that are outstanding, it has established a valuation of $350 billion as of right now. Now, that $350 billion market cap is based on all its offerings, as well as in 2024, SpaceX is estimated to have accumulated about $13 billion in revenue. That revenue is expected to continue to increase as years progress. I think next year they're looking at more of a $15 billion in revenue. And there are two publicly traded companies right now that have over $1 billion equity stake in SpaceX. And that is Alphabet or Google, who they have a 7% equity stake, which comes to approximately about $25 billion. They started providing funding for SpaceX back in 2015, and they did some other rounds of funding for SpaceX, and that investment has paid off handsomely. Also, you have Bank of America. They have a little less than a 1% equity stake in SpaceX, but that comes to about $3 billion. So those are two companies that are currently traded that have equity holdings, equity stakes in SpaceX over $1 billion. Now, there are other tickers that offer exposure to SpaceX via ETFs or investment management. The first and most notable is DXYZ, which is Destiny Tech 100. And as you can see, they have 52% of their holdings is exposed to SpaceX. That is very unorthodox. Most investment managers and ETFs pride themselves on diversification, and they don't load up too heavily on one particular company. But this particular group has kind of, rolled the dice a bit, and it's paid off for them as well by having such a huge portion of their exposure in SpaceX. You also have a company called Stack Capital. Stack Capital is actually traded on the Toronto Stock Exchange, but you can get exposure to that particular company via the U.S. markets, via the OTC market through ticker symbol STCGF. And Stack Capital has 18% of their holdings in SpaceX, as you see in this particular chart. Next, you have Barron Partners Fund. They have 16% of their holdings in SpaceX, as you can see here. Barron is a very big Elon guy, so he has a very Elon heavy portfolio on this particular fund. As you can see, the bulk of the fund, 36%, is in Tesla, and then you have the 16% in SpaceX. So even though this particular fund has quite a bit of exposure to SpaceX, Tesla is the main holding, so be mindful of that. So as Tesla goes, this particular fund could go, but again, they do have quite a bit of exposure to SpaceX. Next on the list, you have ARK Venture Fund, Kathy Wood's ARK Venture Fund. As you can see here, it has a 13% holding in SpaceX. So again, there's another way to get involved in having exposure to SpaceX prior to it going public. And then the last two are another Barron fund, is a Barron Focused Growth Fund. They have 10%. And then there's the XOVR ESR share crossover ETF, which also provides 10% exposure to SpaceX. These are the companies that are publicly traded that offer you at least 10% exposure to SpaceX. Now, all of these companies have their pros and cons. You look at Destiny Tech. Yes, you have huge exposure to SpaceX. The downside, though, is that even though you have huge exposure to SpaceX, the company trades well above its net assets value, or NAV. Its net assets value is around $6 to $7 a share. But as you can see in this particular chart right here, this is a chart of Destiny Tech. It trades in the $40 range. So the actual NAV, or net asset valuation, is trading well above what the NAV is. And so every now and then you can get a company and the market will reward the company for taking the gamble of having all that exposure in one company. And that is what they are doing with SpaceX. because it has so much of its holdings in SpaceX, it is giving whoever buys that particular stock or that particular holding a bit of a premium. I mean, a huge premium, a premium that you wouldn't normally get. So by buying into DXYZ, it has a very high premium. The thing with that, though, is you don't ever know how long it's going to last. Also, when you're dealing it with DXYZ, they have quite a heavy management and expense fee. It's around 4.5% to 5%. So keep that in mind if you do try to get involved in ticker symbol DXYZ. Stack Capital. Here's a picture of their chart. As you can see, it's done quite well since its inception back in 2023. The problem with dealing with Stack Capital is, as I said, it trades on the OTC markets. Typically, those markets can be illiquid, so it makes it hard to get shares, and it makes it very difficult also to liquidate shares. So that is something that you have to keep in mind. Even though it has performed well thus far, know that there may be issues with liquidity moving forward if you're trying to get your money out or trying to accumulate shares. I talked about Barron's Fund and how you have to deal with the fact that it's heavy Tesla. So as Tesla goes, it goes. Then you talk about Cathie Wood's ARK Venture Fund, as you see here. Also, it's done very well since its inception back in near 2023. Also have to keep in mind with Cathie Wood's, it has that 5-ish% management fee and expense fee. So be mindful of that if you try to get involved via Cathie Wood's ARK Fund. Now, would it be prudent for us to get exposure to SpaceX right now through some of these tickers? I think you have to look at the true value of SpaceX. And as you can see, the revenues doesn't quite line up with the market cap, but there is quite a bit of value in SpaceX that you really have to pay attention to. When you look at the Starlink version of SpaceX, there's continued growth in the broadband services. There are still a huge number of places throughout the world that don't have internet access that SpaceX can provide or Starlink can provide for those countries. Huge revenue growth potential in that. You're also looking at having that satellite infrastructure can also play a role in potential defense of the U.S. Trump has talked a lot about coming up with this Golden Dome initiative to provide defense for the U.S. I know Elon and Trump have had a bit of a falling out recently, but I think both still need each other. And I think if it mattered about the defense of the country, I think they would find some common ground. But again, they provide that level of communication that could be a true asset in military defense or defense of the country that no other company can provide. Also, just having that type of infrastructure in space, it will take another company years upon years to create that sort of infrastructure. You almost can't put a value on that. So there is massive value in Starlink. And then as far as the space exploration portion of the company, they are the preeminent space exploration company in the U.S. and in the world. It has surpassed NASA. They do so much more than NASA, and NASA relies strictly on government funding. They also have a segment of civilian launch where they actually, civilians can pay SpaceX to fly into outer space. Some of the fees with that are pretty hefty. Right now, it's really for the rich, but that's another revenue stream. Also, with all the exploration, it opens the door for things like space mining. Again, it gives them something that no other company can provide. And when you have that, you talk about something that you really can't put a value on. So I believe moving forward, when SpaceX does go public, you will see that it would probably have a valuation, in my opinion, when it goes public, of probably in that $1 trillion range. And again, it's not just based on revenue, but just on the overall infrastructure and value that SpaceX provides. So I think if you are comfortable with some of these investment management groups that have access and exposure to SpaceX, it might be in your best interest to try to get some exposure. But I think it all depends on how comfortable with those things you are as an investor. Keep that in mind. Again, I'm going to do one more company that I want to look at that's currently private that will go to via the IPO route in the very near future. Be on the lookout for that. Hope you liked the video. Please like, comment, and subscribe. Catch you next time.